Morning, Steve Free in Chicago with the morning grain comments. Well, as we end the end of the month of July, the markets continue to focus on three factors. Number one is the weather. Yesterday we had a pretty good rally as the noon maps looked dry next week across the U.S. Midwest, and the lack of that rain caused a bounce in prices. Overnight, the maps changed and show a pretty good rain event for later next week as this cool, dry pattern breaks down and allows a front to move across the Midwest. So we've got beans anywhere from 10 to 11 cents lower, corn a couple of cents lower, and wheat a couple of cents lower. So we don't know if this is an important top in the market or if it's just trading sideways or chopping around until we know more about the crop sizes. But we are lower because the weather looks to be better late next week across the U.S. Midwest. The second thing has to do with the outside markets. We get a lot of economic data here in the U.S., FOMC meeting. A lot of these things could help the dollar, could help our stock market, could help the bond market, but could also hurt the crude oil market. We still have unrest in Gaza. We'll be watching to see if Argentina defaults on their debt and what impact that might have on the Argentina economy and farmers selling. We do note that with this bounce in the beans, the Brazil and the Argentina farmer has become a very good seller of cash soybeans. We'll also be watching China economic growth, and we'll be also watching the sanctions in Europe against Russia and if that has any impact on grain flow out of Russia. The third thing has to do with money flow. We've seen the funds get out of their longs in beans. We've seen the funds reduce some of their longs in corn. We've seen them add to the shorts in wheat. And so what do we do from here? Assuming normal weather, they should continue to liquidate out of their positions in the long corn, and they should add to their short bean position. The question mark is China buying, commercial buying. Will the commercial come in and will he begin to buy the market at these price levels? And then obviously the other question mark is the U.S. farmer. Is he going to sell grain at these price levels? Or is he going to try to store as much as he possibly can? So we're trying to get through the remainder of the crop growing season. We're trying to watch all the financial data and trying to get a handle on this money flow. In general, if we have normal weather, prices, especially beans and corn, should go lower. As always, these are my thoughts and not those of ADM or ADM Investor Services. And have a safe and profitable trading day.